Happy Monday to you. This is John McEntyre Money Show Live. I'm John McEntyre. Today is February the 3rd, 2025. First month of the year is out of the way. And so hopefully, you're still on financial, you're still on target financially. You're still going after your goals and everything. Um, like I said, it was mid-January. I think it was January the 10th to be exact, that everyone was, not everyone, it was National Quitters Day, which a day was given for those that actually quit their New Year's resolutions. And so January the 10th, that's not even 2 weeks into the month, into the year. Let's put it that way, into the year. And most people, over like 60% of the people had actually quit, given up on their resolutions. And I'm like, how can you actually give up on something you barely started? That's like, for instance, you're going to run a marathon. You decide a marathon, and the gun goes off, and what? Not even a quarter of a mile, barely a quarter of a mile, you quit. I mean, it's 26.2 miles or something like that. And you've quit a quarter of a mile in. You haven't even completed 1 mile and you've already quit. So yeah, that's what that's like doing, is quitting that early in the race. So hopefully you haven't quit. You're still going after those. And in today's show, I'm actually covering, talking about some changes that have been made by the president, and one of them that most people feel will affect them the most is actually the tariffs that are being imposed on the big three countries that we trade with, which is China, Canada, and Mexico. And so a lot of people are actually nervous about that, and rightfully so. It's rightfully so, because anytime you hear the word tariffs or taxes, it is time. Those things will affect your finances, your personal finance, and there are ways to handle it. It won't destroy it, but it does affect it. And just like anything, you have to have strategies. That's why I say, we all know in life, when we're going for something, it's never a straight line. We don't change the goal. We just may have to change strategies, maybe put in some new techniques, some new, because we need, the new knowledge. We have some new knowledge, and we have to handle it. And so that's what I'm basically going to talk about, because the question, well, before I get into the question, I want to thank everyone. I did take a break, had a lot of education, some business matters this time of the year. As I'm starting, the year starts off, some good things happen, not so good things happen. But this is actually something that's good. Um, a goal that I had set for later in the year, and is actually an opportunity for it already come upon me. And so I had to, really handle it. I was like, the goal that I had set, I said I would handle it. I would take a break during one of the breaks of the show. I would actually handle it, but it came up earlier, and so I had to handle it. And it's actually, we have some good stuff coming down the pipeline this year, as far as the show is concerned. Some big changes that we're all excited about. And so, with that being said, I also want to thank everyone. People were asking me what was going on, and I explained to them. Also, they were sharing their wallet wins, and I got a lot of wallet wins. So I'm glad to hear, even though some changes have been made, new administration, everything like that, people are staying the course of the basics of what affects them personally, because some things can happen and it may affect one group of people, it may not affect the others as much. And so, you have to look at, that's why it's called personal finance. You have to look at your personal finance situation and how these things affect you personally. And so, thank God that everyone, they're sharing their wallet wins. They're opening those high yield savings accounts. they're making sure that they're on target with their IRAs and their 401ks. And tax season is about to come up. Those W-2s have been mailed out, and people are, they're getting ready for that, and they're already have a plan for if they do receive a tax return, which is, my opinion, not a good thing if you receive a tax return. But if you are, for those that are receiving a tax return, they have a plan for the money when they receive it. They're not just going to spend it like they normally do. They actually have a plan to do it. Maybe pay off some debt, maybe catch up with retirement contributions, college funding for the kids, those types of things. Taking care of those things, building that emergency fund, building the sinking fund. They have an actual plan for it, and so it's good. And I'm thanking every those out there that are sharing those wallet wins. And so I want you to share yours here. Put the hashtag wallet win. I see it, I'll share it, celebrate it, because that's what I'm here to do, is to help you celebrate as you move forward to financial health and wellness. All right, so let's get into this. So the question was posed to me, it's a much longer question, but this is basically what it is. How will the new tariffs on our trading partners affect me? And when they say trading partners, they're meaning, as I said earlier, the big three: China, Canada, Mexico. Those are the ones that the president has threatened to impose these tariffs up to 25% on them. And so there's a lot of misconception, first off the bat, about what tariffs are. And so let's just cover the basics right now, because most people are saying, the government, our government, and they're going to tax these countries. Okay, well, you've got it wrong right off the gate. America, countries can't tax other countries. They don't tax other countries. That's just not how it works. So if we impose a tariff on Canada or China, for example, they're not writing us a check. It's not like they're doing a tax form, completing a tax form, a 1040 or something like that, and then say, okay, we owe you this much in taxes. That's not how it works. That's not what they're doing. Instead, basically, the tax is on the American companies that are doing business with these countries, that are importing their products. So it's actually, the tariff on the country is actually a tax on the American companies that are doing business with these countries. So hopefully that clarified those things. And they are the ones that import the goods. So so the next question is, how do the companies afford to do that? By raising prices. That's what they do. They raise their prices. America taxes the company. So for the company to stay profitable and to make that profit margin, they have to raise their prices. So they receive it from the country, raise the price. There you go. All right. So when we impose so-called tax on Canada, China, Mexico, it's paid for by increasing the cost of the stuff that we as the American consumer are buying, whatever we're buying. So at the end of it, we're really paying the tariff. We're paying the taxes. That's what we're doing. So it's a tax on us, and it's designed to make the foreign goods more expensive. So at the end of the day, some people call it good, some people call it bad. Depends on how you look at it, and depends on who you are. The consumer, anytime there's an increase in anything, it's the American consumer that's going to foot the bill. Basically, that's what's going on. So then the next question is, why would we even impose a tariff? And it's an argument that, pretty much gives the American company the advantage. And basically, here it is. Let's say, for instance, there's a product, let's just say a product from China, a pair of pants, some pants, shoes. Let's just say shoes from China. We're paying, these aren't, crazy, maybe children's shoes, $10. Okay, paying $10, and in America that same shoe is $12. Okay, so it's coming from China at $10. America is 12. So now you understand why you would probably buy the Chinese shoe. You're saving $2. Okay, now if a tariff of 25% is imposed on China for importing their shoe, then suddenly our shoe is cheaper, because ours is $12. China's was $10. Since they've been imposed a 25% tariff, now we would be paying $12.50 for that shoe from China, 12 in America. So either way, the end price goes up for us. It's still an increase. If you were paying $10 for the shoe from China because you didn't want to pay 12 for the one in America, well, now the one from China is $12.50, so you don't have a choice. If you want to save money, is to buy the $12 shoe. So either way, you're not paying the $10 any longer. You're paying at least 12. So you're going to pay more money. That's just the way it's going to happen. With the tariff increase, it trickles down. We're the consumer. It trickles down to us, and we have to pay. We're actually paying it. It's not the government paying it out of their pocket. They don't have the money. The government never uses their own money. They use our money, our tax dollars, to pay for this. So some would say, another argument would say that favors the tariff, because the first example that's against it. That's why some people argue against it, because they say no matter what happens, we're going to pay more money anyway. So that's the argue for not wanting to increase the tariff, because that means we as the consumer excuse me, would have to pay, are going to pay. So in favor of the tariff, the other side, it would actually correct a trade deficit. And that's basically when one country buys more stuff from another country than selling stuff. So, and basically here's what's going on. We're buying more from China, for example, than we are actually selling to China. Some people have put it much harshly as saying, we need China more than China needs us, which is that's not as technically true. That's not true. We need each other because we're trading. We're actually trading. Okay, so as U.S. have to trade, we're trading. Since we are buying more from the countries than we're selling to, it creates the deficit for us. That's basically what's going on, is creating a deficit for us. And that's why the relationship with China is so important, is because we're buying a lot more stuff from those countries than we're actually selling to them. That's why relationships are so fragile, important in one hand, and fragile. So the trade deficits, they actually have, pros and cons. It's nice to get a lot of cheap goods, because, if you're getting something, in America, you would pay $12 for it, but you can get it from another country at $10. That can be a good thing, saving money. But on the other side of it, the bad thing is that creates leverage for the other country. It creates a lot of leverage on their side, and leverage means another word for advantage. It means they have a bigger advantage over us. So the question, and also when they have leverage like that and they're making that much money, they are actually they're taking the leverage, the money that they're making from us. They're buying U.S. stock and companies and real estate. Being here in North Carolina, from the foothills, China has made their presence known in the foothills of North Carolina. They're buying up more real estate than anyone in the area. I've personally seen it myself. I've seen, especially when I used to go back to my hometown every Sunday, I would see the Chinese presence More and more business people, with their laptops and their video cameras, doing videos of downtown of each town of the county, of the area of north of the foothills, and I mean a large part. So they're making their presence known, and they are spending a ton, and that's just North Carolina, rural property, things like that. Not counting, the larger cities, the New Yorks, the Miami, the LAs, the Las Vegas, Chicago. They're making their presence known here, and that's why, because they have the leverage, they have the actual money to actually do that, and so that's where they're spending their money. All right. So the question is, are these tariffs good? Most the economists, they just don't think so. They don't like it because it, it it's leading to, in their opinion, it's leading to a trade war, meaning we can't sell them stuff either. We can't sell them stuff. We put a tariff to where we're reducing buying from them, and so they react by putting tariffs on us and not buying stuff from us. And that's basically what a trade war is. um in broad strokes, trading is good. Stifling trade is bad for all economies involved. The big picture, a trade war is never good because the consumer is the one that suffers the most. It is the consumer that we're the ones that pay the price for it. We're paying for all of this. If we go into a conflict, if it causes a conflict, because some people are concerned about that, okay, this can cause a major conflict. Okay, and what happens when a conflict goes down? Our taxes go up because we have to fund the conflict. If it goes that far, hopefully, prayerfully, it won't go that far. It's these tariffs, and those countries. Well, Canada, Prime Minister Trudeau, he's made the announcement that they are going to impose a tariff on American companies, imports. I remember I saw a news report last week to where one of the largest uh, I think it's Tennessee whiskey, um, the president, Prime Minister Trudeau, he basically told the companies to pull it from the shelves. They're not even going to sell it. And so that's going to cause a bottleneck, a stockpile here in America of unsold whiskey, which is one of the larger imports into Canada. That's where they make one of their larger purchases from us. China is clothing, it's technology, it's a lot of things. They're the largest of the big three, not counting, Mexico food products, things like that, produce and everything. And so here we go. It could cause some serious issues. Um, so as you can see how the tariff, affects us. Hopefully I explained it. I tried to keep it as simple as possible, that they're not writing a check to us. We can't, the countries just don't tax other countries. America don't send them a tax bill and they pay it. It's not how it does. They tax the American company. The American company raises their prices. That's what happens. The tax is actually on America, punishing China by taxing our companies, basically. So that's the way I see it. um, so, bottom lining it, what does that mean for you? For you as the investor, for you as someone who has a family to take care of, to feed, to clothe, to educate, those type, keep warm, house, everything. What does that mean? What should you do? There are some things to do depending on your situation, but what you don't do is go away from the foundation of your personal finances. You don't go away from saving, because here's what's going to happen. The worst that will happen, as I said it earlier, just so to put this in perspective, we're going to pay more for products. So you're going to have to put that into your budget, that you're going to pay certain things. We were already seeing inflation, price increases, and we're going to see more with these tariffs. Some prices of certain goods are going to go up, so just be prepared to pay more. We're seeing the effects at the pump. We're seeing it and we're going to see it in stores. I'm already seeing certain products that I was buying I'm already seeing the price increase. I'm already seeing it. And so the way we budget, we keeping everything low enough to where, yes, it is affecting us, but it's not causing a big headache. It's causing a headache because I just don't want to pay more for the product. That's where the headache comes from. But it's not like breaking my budget or anything. It's not breaking our budget. So that's what you have to keep in. You have to stay focused on what you're doing. Make the adjustments for the price increase, for the increases when you go to the grocery store, when you go buy the kids clothes, when you go buy clothes for yourself, when you go to the gas pumps, when you make any of these purchases. Be prepared for price increases. Just be prepared for it. Put it in the budget. I mean, it's not like we're not going to see something, increase by 50% or double in price or anything like that. We're not going to see that, but we will be seeing increases because of these tariffs. So you just have to stay focused. Some people that have asked me the question, that they're in the market and they've seen some of their stocks, do things they've never seen them do before. If you are one of those that's handling individual stocks and things like that, that's a question for you to answer for yourself. How much are you prepared to lose, and do you see it? Do you see yourself recouping the money anytime soon, or will you just have to wait a long time? And some people just made the decision to sell. We're not in individual. I'm not in any individual stocks or anything like that. I'm in index funds, and so those you basically, do a reset or maybe do some mild changes. They pretty much do it on their own. So we're not that concerned about that part of the market, the real estate side of it. The way we do real estate, keep everything, prices low, don't pay over, not overpaying for properties. And so any rentals and things like that, that's not being affected in any way. We probably might see some, the costs in, materials for repairs and upgrades and things like that. But right now we're pretty much, prepared. People that I'm talking to, some they're making the adjustments. And so that's what you have to do. Now is really the time, especially if you're getting started. It's actually for someone that's just beginning to really get serious about their finances. This is actually not it's actually a good time for you, because you're seeing things when they're not perfect. They're not. It's rarely perfect, but they're not so good. There's an issue that you're going to have to learn to handle right out of the gate. And so when things do ease up, which they normally do, that's going to be even better. I was talking to someone very close to me that I've been dealing with a long time, and they were talking about back in the 70s and 80s when they started to invest in real estate. Interest rates were 18, 19%, and so when they got into it, that's just the way it was, and they was having to put 50% down on the properties and everything like that. Having to pretty much buy the equity. They was basically having to put their money up to buy the equity and everything. And so when the 86 reforms hit, those big tax reforms hit, things like that, and it benefited the investors, and interest rates fell, things like that. Later on they began to fall in the 90s. That's when a lot of them, they became multimillionaires. They became millionaires because they were used to handling high interest rates and everything. Interest rates fell, they were able to refinance. They pulled all of this cash, bought more properties, and accelerated their wealth. So I say this is not that extreme, but it's sort of like the same thing if you're looking at it that way. You're getting into it at a time when things are sort of high. So when things do fall and you start to see the benefits, maybe prices fall or whatever, hopefully it'll go that route. But it will eventually, prices, they ebb and flow. This is not the first time. I remember, gas is increasing in price, but I remember during the '08 recession, we was almost at $4 a gallon. So right now, going from 240 to 260, almost, $3, it's not really affecting me because I've seen worse, and older generations, they've seen worse and everything. And so that's just the way to put it into a perspective and look at it that way. So hopefully I gave some tips, maybe simplify some things, made help. Hopefully you look at it much easier now, and what to do, which is just stay the course, Like I said earlier in the beginning of the show, you don't change your goal. You just may have to change your strategy a little bit. You just have to make adjustments. That's just, it's called life and money part of life. And so that's what it's called. And you just have to handle it that way. So hopefully I gave some good information. I'll be back tomorrow to answer some more questions and to cover some other topics. So, but until then, if you have any questions, or maybe it's time to look at your finances and get things on track, you want to get on target, there's some decisions you need to make, our contact information is scrolling there at the for some odd reason I just can't talk today. The information is at the bottom of the screen. Maybe I'm trying to use words that's just too big for me, I don't know. But if you need any assistance, any help, any questions answered, don't hesitate to contact us. And we will be more than happy to help you with those. So this is John McEntyre signing off. Until tomorrow, have a good day.